All right, curious minds, welcome to the deep dive. You've sent us quite a stack of financial documents and reports on a real tech giant, IBM, and we're ready to unpack it all today. We're dissecting their second quarter and, well, the first half of 2025 results. We've got the Q2 earnings report and that detailed 10Q filing from July 24th. Our mission, as always, cut through the noise, hopefully give you some aha moments, and leave you truly well-informed about what's actually happening inside IBM.
Exactly. And we're really going beyond just the headline numbers. IBM CFO James Kavanaugh mentioned innovation resonating with clients, especially around AI adoption. He talked about driving revenue, margins, profit, which then fuels cash flow and shareholder value. So we're going to test those statements against the data, see how it's really playing out.
But let's unpack this for you. We'll start big picture, then drill down into the business segments. After that, a peek at the balance sheet, and we'll even touch on the legal stuff and some governance updates. Ready to get informed? Let's dive in.
So let's kick things off with IBM's overall financial snapshot. For Q2 2025, they reported revenue of $16.977 billion. That's up 7.7% year over year, pretty solid. And adjusted for currency fluctuations, that growth is still 5.3%. Looking at the first 6 months, total revenue hit $31.519 billion. That's up 4.3% reported or 3.9% adjusted.
Yeah, the revenue looks decent, but what's fascinating here is when you look at profit, it's a bit more nuanced. Income from continuing operations for Q2 was $2.193 billion. That's a strong 19.8% jump over last year. However, for the first 6 months, that same income figure actually decreased by 4.6% to $3.248 billion. So that immediately makes you ask, right, why the big difference between the quarter and the half year?
That is a great observation. What's the story there? Is that something investors should worry about, or is there like a specific reason for that half-year dip? Well, this is exactly where IBM's non-GAAP operating earnings come into play. They use this, to give a clearer view of the core operations by stripping out certain things like acquisition charges, retirement costs, that kind of thing. And on that operating basis, earnings were $2.652 billion in Q2, up 16.6%. And for the first 6 months, $4.169 billion, up 8.6%. So yeah, the official GAAP net income dipped for the half year because of those specific items, but the underlying operational view actually shows consistent growth. It's about which numbers you're focusing on.
Oh, okay. That makes a huge difference in understanding it. And we also saw some pretty impressive gross profit margin expansion too, right? Q2 margin was 58.8%, up 2 percentage points. First half, 57.1%, up 1.9 points. What does that tell us?
It tells us they're getting more efficient. Those productivity actions they talk about seem to be working. They're basically making more profit from each dollar of revenue they bring in. Always a good sign.
And what about cash flow? Kavanaugh highlighted that. They generated $1.7 billion in cash from operations in Q2. That was actually down $0.4 billion from last year. But then free cash flow, what they actually have left over, increased by $2.2 billion to $2.8 billion. And for the first 6 months, similar story. Cash from ops down slightly, $0.2 billion, but free cash flow up $0.3 billion to $4.8 billion. So what's the takeaway?
The key takeaway is they're managing their cash effectively. Even if operating cash fluctuates a bit, that free cash flow is what really matters for investments, paying down debt, returning cash to shareholders. The fact that free cash flow is up shows they're optimizing things, managing working capital well. And speaking of shareholder returns, they paid out $1.6 billion in dividends in Q2 and $3.1 billion in dividends total for the first 6 months. Consistent returns there.
Okay, so that's the big picture. Let's peel back the layers now. Where's the growth coming from? Let's start with software. That seems to be the engine for their transformation. Q2 software revenue, $7.387 billion. That's up a strong 9.6% reported, 7.6% adjusted. First half, $13.722 billion, up 8.6% reported. That was pretty solid.
It really is solid. And within software, you see the growth in their key strategic areas. Hybrid cloud, for instance, grew 16.1% in Q2. Automation was up 16.2%. Data also saw a nice 8.8% increase. Transaction processing was, well, pretty flat. But this growth feeds into their annual recurring revenue, their ARR. That's the sticky stuff. It stood at $22.7 billion, up 12.2% reported or 10.4% adjusted. IBM really emphasizes ARR, shows long-term client commitment.
Okay, strong software story. Let's pivot to consulting. Often a bellwether, right? For client spending on big projects, how did consulting do? Q2 revenue was $5.314 billion, up 2.6% reported, but basically flat, actually down 0.3% adjusted for currency. They say it's stabilizing. First 6 months, revenue $10.382 billion, up only 0.2% reported. So stabilization sounds okay, but then I saw the signings future commitments were down significantly, like 15.6%. Should we be worried about that as a leading indicator?
You're absolutely right to flag the signings. That's crucial. While the revenue shows stabilization, those consulting signings dropping 15.6% or 18.2% adjusted down to $4.793 billion. That's definitely something to keep an eye on. Signings are, management's best guess at future work. A dip signals clients might be a bit cautious. It tells us the environment's still dynamic. Clients are prioritizing maybe more cost-efficient projects, things like AI ops, cloud platform engineering, specific application transformations. Not stopping spending, but definitely reprioritizing.
Okay, makes sense. Shifting gears again, infrastructure. This looked impressive. Q2 revenue, $4.142 billion, up 13.6% reported, 11.5% adjusted. First half saw $7.027 billion, up 4.6% reported. That's a big jump, especially in Q2.
Yeah, that strong Q2 performance in infrastructure. That's mostly the new IBM Z platform, the Z17 launch. For a lot of big companies, the mainframe is still the absolute core of their operations. Reliability, security. This launch shows they're still innovating there, and clients with deep pockets who need that top-tier performance are buying in. It really highlights how critical these big product cycles are for their hardware business.
Got it. And finally, the financing segment. Small revenue, $166 million in Q2, down 1.7%. For 6 months, $357 million, down 1.2%. So revenue slightly down. But then the profit and financing surge, like 134% in Q2. What's going on there? That seems counterintuitive.
Huh. Yeah, it looks odd at first glance. It's not magic, though. It's likely smart financial management. Despite that slight revenue dip, profit soared, like you said, 134.2% in Q2 to $179 million and 47.1% for the first half. And that massively boosted their return on equity 49.2% in Q2, way up from 21.4% last year. What this usually signals is a strategic shift. Maybe they're focusing on higher margin financing deals, getting rid of lower yield assets, or just optimizing their lending practices. It points towards a real focus on capital efficiency in that segment, making every dollar work harder rather than just chasing volume.
Okay, interesting. So beyond the segment performance, let's look under the hood a bit. The balance sheet. Total assets at June 30th were $148.585 billion. That's up over $11 billion since the end of 2024. What's driving that big increase?
A huge chunk of that increase, particularly in non-current assets, about $11.6 billion, or almost $9 billion adjusted for currency, comes from goodwill and intangible assets. And that's primarily from the HashiCorp acquisition. Goodwill is basically the premium paid over the book value, reflecting reputation, customer lists, things like that. Intangibles are patents, brand names. It really shows their strategy of growth through these big strategic acquisitions. Just in the first 6 months of 2025, they spent nearly $8 billion, 7.845 on acquisitions, mostly HashiCorp in Q1.
Wow, that's a massive investment. How did that affect their debt? Did they have to borrow a lot for that?
Well, yes. Total debt increased by about $9.3 billion, up to $64.164 billion at the end of June. And that was primarily driven by issuing debt in the first quarter, likely to help fund that HashiCorp deal. But importantly, they report they're still well within their debt covenant requirements. So they're managing that increased leverage according to their agreements.
Okay. Before we move off the financials, any other interesting bits from the income statement or strategic plays?
Yeah, one other thing. Their intellectual property and custom development income, it increased 2.2% in the first half to $468 million. And the report mentioned this was mainly driven by deals with a Japanese consortium, basically licensing IBM's IP and expertise for advanced semiconductors. It's a neat example of how they monetize their huge R&D investment beyond just their own products, licensing out the brainpower.
Right. And it's also worth mentioning the foreign currency stuff, hedging and transactions. These can swing wildly sometimes, but IBM says their hedging aims to defer the impact, not eliminate it. And crucially, they state the impact from currency translation and hedging on their pre-tax income was, quote, immaterial for Q2 in the first half. So they manage that risk effectively in this period. Okay, now let's shift gears a bit. Beyond the numbers, there's always the broader operational and legal environment. IBM's a global giant, so they're involved in various claims and proceedings. That's pretty typical, right?
Absolutely. Standard for a company this size. One ongoing thing is a class action lawsuit about their pension plan. It alleges miscalculation of certain benefits. A lower court dismissed it, but recently, an appeals court vacated that and sent it back for more discovery related to the statute of limitations. So that's still active, potentially costly, and definitely something to watch.
And they also have environmental proceedings under Superfund laws. cleaning up old hazardous waste sites.
Correct. And then there are the tax challenges, several significant ones. In Brazil, they're disputing about $350 million in non-income tax assessments. And here in the U.S., the IRS has proposed adjustments for tax years 2013 through 2016. If those adjustments are upheld, it could increase their taxable income by $4.2 billion and $1.2 billion for those periods, respectively.
Wow, $4.2 billion. That is definitely not small change. What does that mean for them practically?
It means a long fight, most likely. IBM strongly disagrees with the IRS positions. They plan to pursue resolution, potentially taking it to court. That involves significant legal costs, time, and resources, and it creates uncertainty until it's resolved. There's also about $430 million in prepaid taxes tied up in disputes in India. So yeah, managing these complex, high-stakes tax issues across different countries is a major ongoing challenge.
Okay, shifting from legal battles to governance. For those interested in how the company runs itself, on July 24th, IBM's board adopted some amendments to their bylaws. What's notable there?
Well, several things. They updated rules to align with the SEC's universal proxy requirements. This puts more specific obligations on stockholders who nominate directors. They also clarified procedural stuff for stockholders wanting to propose business or make nominations at meetings, like needing to disclose ownership and derivatives or agreements they have related to their nominations. And interestingly, stockholder nominees now have to make representations about voting commitments or other financial deals they might have. Oh, and stockholders soliciting proxies have to use a proxy card color other than white, which is typically reserved for the company. Little details, but all aimed at transparency and shareholder voting.
And finally, on accountability, the CEO, Arvind Krishna, and CFO, James Kavanaugh, both provided those standard certifications, basically attesting that the quarterly report fairly presents the financial condition and that their internal controls were effective. No material changes to internal controls reported either, so ticking the boxes there. So after digging through all of that, what does it all mean for you, our listener? We've seen IBM, this tech giant, navigating a pretty dynamic environment. Innovation in hybrid cloud and AI seems to be driving things, software and infrastructure segments, showing strong growth, especially with that new Z platform. And importantly, operating earnings are heading the right way.
Indeed, there are definitely areas to watch, like consulting revenue stabilization and especially those future signings. And the ongoing legal and tax challenges are not insignificant. But yeah, the consistent growth in operating earnings, the healthy free cash flow, the strategic investments like HashiCorp, it all points to a company really focused on its core strategy. And those bylaws changes, they just highlight how corporate governance and shareholder engagement continue to evolve.
So, as you reflect on this deep dive, maybe consider this question. In this world of constant tech disruption and economic uncertainty, how does a company like IBM, with, over a century of history, how do they keep balancing that massive legacy with the absolute need for constant innovation and adaptation? What new kinds of value might emerge from this focus on hybrid cloud and AI, and how does that interplay with their foundational businesses like the mainframe?
We hope this deep dive gave you a clearer, maybe more nuanced picture of IBM's recent performance. Keep digging, keep asking questions. It's a fascinating world out there.
Thanks for joining us on this deep dive. Until next time, stay well informed.